Washington, D.C., tax rates and mortgage interest are getting headlines with today's release of the tax legislation that might actually become law, but several other features, involving medical expenses, tuition assistance and development tools for cities like Cleveland, matter, too. These tax breaks would have been killed had the House of Representatives prevailed. They survived because of the insistence of senators, although some of the provisions have changes or time limits that will displease taxpayers who use them. Still, it appears the voices of mayors, college officials and, to a much more limited extent, health care advocates were heard, but not enough to save the Affordable Care Act's individual mandate to buy insurance, which will end. I look forward to both the House and Senate passing this legislation next week and the President signing these historic tax cuts before Christmas. https://tco/oivjday4. Ohio's U.S. Sen. Rob Portman, a Republican, was on the House-Senate Conference Committee that hammered out today's bill. He has been criticized by editorial boards and Democrats for supporting a bill that gives priority to corporate tax cuts and could drive up the cost of health insurance. But he was also among the lawmakers pushing to keep the tax breaks mentioned below. Rob had worked throughout the process to improve the bill, including preserving key tax incentives that benefit Ohio, said Kevin Smith, Portman's Deputy Chief of Staff and Communications Director. Overall, these reforms will help spur investment and job creation around the state. Ohio's Democratic U.S. Sen. Sherrod Brown, blasted the process in a statement that accused Republicans of planning to steal the money Ohioans have paid into Medicare and Social Security, to pay for the hole they are blowing in the deficit. I offered to work with the president and Republicans, and I introduced multiple amendments that could have put real money in the pockets of Ohioans, said a statement from Brown. Instead, Washington chose to cut taxes for millionaires and corporations and pay for it by cutting Medicare and kicking people off their health insurance. Medical expense deduction. You used to be able to deduct medical expenses that exceeded 7.5% of your income, a tax feature especially popular and demanded by seniors and others with high health care costs. Then the threshold for claiming the deduction went up to 10% in 2013, although it stayed at 7.5% for seniors until this year. The House-Senate conference report that could be voted on next week will make the threshold revert to 7.5% for everyone during the current tax year, according to a Republican familiar with the negotiations. It'll be 7.5% again for 2018. Call it a victory for those who pushed for this lower level. But it will go back to 10% for everyone in 2019. Tuition. Congress will still allow tax deductions for student loan interest. It also won't treat tuition assistance, given to graduate and professional students who teach of conduct research, as taxable income. The House had wanted to add the value of such assistance to a student's income for tax purposes, so that a grad student getting $30,000 in waived tuition at Case Western Reserve University, for example, would have to pay tax as if they had earned an extra $30,000.